Hello, Pratik. Are you
Yeah,
the
hi
host?
everyone. Hi Frederick. We are still awaiting a few attendees. So let me just check.
Pratik, I'm just
Yeah.
looking at you and your video is really bad.
Okay,
Is
I'm
my
just
video
checking that.
okay?
Okay, I see that. I'm just checking. I'm rectifying that. Meanwhile, people are
Okay.
just joining in. So let
Uh,
me.
uh, yeah, I just want to make sure that we don't have a problem.
Sure, sure,
Okay, I'm just going to mute for a moment. I'll let you call me.
sure.
Yeah, that's a lot better now, by the way. You look
Yeah, I
fine.
think there was some option that I had to click, so I've just changed that. So I think we should start. So welcome everyone. Thank you for joining us. My name is Pratik and I'm part of Hero Wire. I'm the subject matter expert for finance programs and I'm your host for today. So I will, start by telling you a little bit about Hero Wired, first of all. So Hero Wired is a virtual education company, which is, a part of the Hero Group itself. Hero Wired is actually on a mission to not only reimagine the way we learn, but also build a better and brighter future for all of you. So we are here to equip the learners with the knowledge, skills, and expertise they need to find success. So today we are presenting a webinar on the topic Global Investment Banking Careers by Mr. Frederick Mueller. Right. So if I talk about Frederick, so Frederick has over 30 years of experience in financial risk management for EMEA, also regulatory management for EMEA, and credit market risk management. And he has also worked massively for financial institutions like Bank of America, Dresner Kleinwort, Barclays, and Toronto Dominion Bank, to name a few of them, obviously. And I would also like to tell you that he has published, so he is a published author of two novels, and he did his MBA from University of British Columbia. We welcome you, Frederick, to the webinar.
Yeah,
So
thanks, Pratik.
yes, so moving forward, if you have any questions during the presentation, please type them in the Q&A section and not in the chat box. In your Zoom panel, I think you can see it there, so that the questions do not get skipped. Right. So without any further ado, over to you, Frederick.
Thanks, Pratik. Yeah, and it's five published novels. Number six is going to be coming out soon.
Wonderful. My mistake.
Cheap thrillers, what can I tell you? But yes, I've been lucky enough to have found a career in the financial markets. And I was extremely fortunate in that I'm going to have to share my screen. So let me get started here. I want to do this now so I don't start speaking for a lengthy period as though my screen has been shared when in fact it hasn't. And there we go. Cool. So I think we're pretty much good to go. Yeah. I consider myself very, very fortunate um, to have enjoyed a career in trading, what you guys call treasury, treasury floor, back treasury trading. I actually got a trading job right out of school, which is pretty rare, actually. Um, when I first started, I didn't think anything of it really. It was very competitive, but I just went after a trading job on a Canadian on the trade floor of a Canadian bank. All of the guys in the MBA program um, were going through the university's placement office, because the placement office they had relationships with all the banks and a lot of employers in the country, and they would arrange interviews for us with those banks. But what I did was something different, right? So all of my classmates would go and they would put their name on the interview list and hope that they would be called for an interview, because those banks would visit the university. What I did was something different. One of my professors, again, I was very lucky in that I had instructors, professors who were tied into the industry, who had industry experience. And they were able to tell me and steer me to areas that were really interesting and really challenging. So I still remember him well. His name was Sarkis Khoury. He was an American of Lebanese descent who was my professor in international economics. And I said, well, what are the interesting areas that, I could explore? And he said, well, I'll tell you this, my brother trades swaps with Morgan Stanley on Wall Street. If you learn swaps, you'll get a job. And I didn't know what swaps were. And swaps were, well, put it this way, you couldn't find anything written about them back then because they were so new. People talked about swaps like they were foreign exchange products traded in the money market of treasuries. In fact, the kind of swaps that his brother was trading were interest rate swaps and cross-currency swaps, long dated, a market that was just developing. So what I did was I studied swaps and I studied options. And when I was in school, I made derivative products my specialty. So I took a lot of directed studies work. Pretty much everything I did was directed studies, and I did my thesis. So I did my thesis on swaps, and I did directed studies in pricing options. So I specialized in numerical methods. So in a nutshell, if you're pricing a stock option, an option is a contract that gives you the right, but not the obligation to buy or sell a security, an underlying asset at a certain price by a certain time. In order to do that, you have to model the random process that describes the behavior of the underlying security. So if it's a stock option, you have to model the underlying stock. Turns out that a fellow named Louis Bachelier modeled that process back in 1900 as a Brownian motion. That was in 1900. 1905, Albert Einstein wrote his famous 3 papers, Annus Mirabilis. He wrote a paper on the photoelectric effect, which won him the Nobel Prize. He wrote a paper on theory of relativity, and he wrote a paper on Brownian motion. Turns out that Brownian motion, a stochastic process with drift, which means a trend, it's a random variable with a trend, became the model of choice for pricing options from 1900 onwards. Okay, but there was a problem, right? There was a problem. The problem was there was no closed form solution to an option price, and there was no risk neutral approach. So you had to, without getting into too much details, you had to do an econometric analysis to estimate the market price of risk of that process. Okay, and leave that there. What happened was in 1972, there was a breakthrough in pricing options. And that was when Fisher Black and Myron Scholes said, okay, well, that process can be described, that process followed by a stock can be described by a diffusion equation. And that diffusion equation was exactly the same as the equation that describes the transmission of heat from one end of a metal bar to another. So if you have a metal bar and you heat it from one end, the temperature rises at that end and then it spreads across the metal bar. They said, okay, well, a stock price will evolve through time using a similar process. But they didn't have a way to solve that equation. So they took that equation over to the math department, and the guy in the math department, this was over at MIT, and he looks at it and he says, oh, well, I know that equation. That's the heat equation. And there's a closed form solution to it. And he pulls out a textbook on differential equations and he shows it to them, and that's it. And they were really happy. They went back to their office, and they came up with what we now know as the Black-Scholes equation for the price of a European call option on a non-dividend paying stock. There are 5 variables, right? Stock price, strike price, time to maturity, volatility, and interest rates. You put in those 5 variables into this closed form equation, and you've got an option price. And it was beautiful. From that moment on, from 1972 on, they got the Nobel Prize for that, by the way. From that moment on, the options and the derivatives industry exploded, just exploded, okay? And that was truly seminal. What happened after that was that people in the industry and academics and academia got married to the industry, okay? Because academia developed the models to price, and the industry would use it to create products that they could buy and sell and make money off of. That Black-Scholes equation was only good for one kind of option. If you wanted to price other different kinds of options, what you did was you used something called numerical analysis. You used numerical methods to actually solve numerically the differential equation satisfied by the underlying stock or the underlying interest rate. So you'd create a state space, right? And at every point in that space, that differential equation would have to hold. And you would create boundary conditions on the equation, on the solution, that satisfied the details of the contract that you were valuing, right? It was pretty nerdy and geeky, and but I saw it as a way to set myself apart from my other classmates who all wanted to go into mergers and acquisitions. So I spent 1 year doing directed studies on swaps and options, writing a thesis on swaps and how to bootstrap curves and price swaps, and doing things like explicit finite differencing, solving the differential equation satisfied by an interest rate so I could price a mortgage, things like that. Then what I did to get a job was I went through the regular process, of course, of applying to the through the university placement office, but I also did research on the banks that I wanted to work for in New York and in Toronto. And I took my thesis and I took samples of my work and I just blasted it out there. I just emailed it to the heads of trading desks in those banks. And I said to them, I wrote a cover letter. I said, I'm planning a trip to New York and Toronto on such and such a date in January of that year. Have you got time for a coffee? Can I come in and talk to you? I wasn't even asking for an interview. I just said, I want to learn about what you guys do. Here's an example of my work. And of course, those coffees and little meetings turned into interviews, and I got a job. So part of it was luck, being at the right place at the right time. And part of it was being pretty aggressive about how I went about doing it. And just being keen. I mean, I guess I was one thing if you're interested in this stuff, I would really encourage you to do it. If it doesn't light your fire, then don't do it, right? Because I think success is a function of the number of hours you put into it. If you go into banking, like I'm here to talk to you about careers in banking, bank treasury, investment banking, right? We're talking about the trading floors of bank treasuries. If you go into this business, by definition, you're already in the top 1 to 3%. Okay. And you get paid appropriately. Right.
Frederick, I'm sorry to interrupt.
Yeah.
In case you are also presenting the PPT, it is just stuck on the first page.
I haven't started on the PPT.
Okay, perfect. Then it's perfectly fine. Sure.
That's fine.
Yeah.
I like to tell a few war stories. So where was I? I will be getting into the structure of a bank, and I'll be getting into the kinds of rules you can pick up. But what I will tell you is that if you get into a bank treasury in one of these roles, you're in the top 3% already. Okay. At that level, everybody's smart. Okay. Everybody's smart. So the key success factor isn't, how bright you are. Very often the key success factor is getting along with people and putting in a lot of work. Like I probably worked 20 hours a day, 7 days a week when I was starting out to learn more, just to learn more. And the jobs and the promotions and the money came with it. But it's like that was my life, right? And I do think that you got to do that. It's kind of like your job is just it's kind of like your hobby. That's how I looked at it. And I just loved it, right? One of the best things about a career here is that you get to use, I certainly do, I get to use every day what I studied in school. It's like basic statistics, right? The normal distribution. Everybody goes to school. A lot of people go to school and they're afraid of statistics, right? And their attitude is, oh yeah, take it once, pass, never use it again. Ha ha ha. No, you use it every day. You need to have that. It's got to be in your DNA. You've got to know that stuff. Just about everything I've studied in school, almost everything, except for one or two things, I've used in my career. And that's beautiful because we all go to school. We all want to get something out of it. There's nothing worse than spending a lot of time on something you're never going to use again. I think that's a waste of time, right? I skip those classes, right? If I take a course, it's because I want to use it later. Okay. So anyway, that's how I got into it. And I was lucky. I had the theory. I had the numerate skills to do it. And I was lucky enough to work with and be mentored by some really aggressive traders who taught me how markets really worked. So to get into this business, to do well, you've got to be, it's a trader. You got to be part lawyer, dockside lawyer. You got to be part, market trader, part mathematician, part computer programmer. You pretty much have to have it all. And it's fun and it's challenging. So let's go into the presentation. Talk about careers in bank treasury. I'm going to just gloss over what the bank looks like. And then I'm going to focus on the treasury because banks are big. They do a lot, all kinds of stuff, right? And what we normally think about as banking is not bank treasury, okay? So I'm going to describe the bank as a whole, talk a little bit about those activities, just a little bit because we don't have much time. Then I'm going to focus on bank treasury. How does a bank make money? Bank businesses. Borrowing and lending. So they take retail deposits from you, me, our parents, our grandparents, and then they make home loans. And they make loans to small businesses, right? There's a small corner store, sells fruit, bananas, rice, canned goods. It makes loans to those for their working capital. Then they do something called this. This can be confusing because a lot of people talk about investment banking. This is investment banking. It's advisory work and it's consulting on things like corporate finance and investment management, mergers and acquisitions. This is where people do equity research and market research, and they publish recommendations. Okay. This is investment banking. It's very specialized. It's well paid. It's not corporate treasury. It's not what I'm going to be talking about today. So you can find a rewarding career if you're into things like equity research and publishing reports on companies and mergers and acquisitions and advising people on, their cost of capital. You can find valuable work here in this area. But it's not trading. And in fact, there's a regulatory Chinese wall between the advisory work, this investment banking area, and the treasury who trade the products. Why? It's called inside information. If I'm trading a stock on Infosys and there's somebody in our equity research investment banking area that's going to write a negative report on Infosys and I know about it, I can sell it short and I can make money. That's forbidden. That's verboten. People go to jail for that. So banks have very strict Chinese walls that keep information from flowing from one area to another. That's a big deal. So there's a lot of compliance. So if you pick a career in this area, that's pretty much the area you're going to stick in. You pick a career over here, you'll probably make your career there. That's where you'll stay. Which isn't as bad or as restrictive as it sounds. Here's why. Because the kind of person who likes to read reports and do equity research is not the kind of person who likes to buy and sell foreign exchange in a fast-paced, pressure-filled environment. It's two different kinds of people, two different kinds of temperaments, right? You're over here, you're dealing with pressure, right? From salespeople who want the price now, and you're trying to price a complicated product for them and work out your hedges at the same time and not make a mistake, because if you make a mistake and lose a lot of money, you lose your job. Pressure, pressure, pressure. Here it's probably a different kind of pressure. It's probably pressure of really long hours, reading, writing reports. That's a different kind of pressure. Not going to denigrate it. These guys make a lot of money too, right? Mergers and acquisitions advisory, they make a lot of money. Well, anybody in these kind of businesses here are well compensated, okay? So I'm going to talk about treasury, trading and the supply of treasury products. How do they organize them? Well, there's a lot of ways to look at bank businesses. You look at them by the type of client. So over here, traditional borrowing and lending, those are retail and commercial clients. Things like advisory work and consulting, these are corporate clients, okay? Now you can also look at it by the type of money-making activity, which was in the previous page: investment banking, traditional borrowing and lending, or trading. And you can look at it by the regulatory split. So there's the banking book and there's the trading book. So these guys who borrow money through retail deposits and lend through home loans, they're in the banking book. And people like me who trade derivatives, bonds, swaps, foreign exchange, we're in the trading book. And these two portfolios, the banking book and the trading book, include different businesses, and they have different accounting treatments. Banking book is accrual accounted, trading book is mark-to-market accounted. And they're regulated differently. They have different capital requirements, okay? Again, I live mostly on this side, although I do have familiarity with this side as well. But I'm not a 100% expert on banking book. Trading book is my spiritual home. So where do the businesses fit? I don't know if you guys have had accounting, so I won't spend too much time on this, won't dwell on this. But the whole idea here is that a bank is a company like anything, any other company. It has a balance sheet, it's got assets, it's got liabilities. So its assets are things like home loans, loans to customers, credit cards, but it can do things like it can make a loan to the government by buying a government bond, and it funds these with retail deposits or short-term paper or long-term bonds. Okay, so this is a very simplified balance sheet. Yeah, this is pretty much the banking book stuff. This is the part we've all been waiting for, bank treasury. And to me, this is where the excitement happens. This is the really exciting stuff. Well, I'm kind of biased because I spent my whole career on this. I grew up on a trade floor. What does the bank treasury do? One of the things they do is they manage the interest rate risk between asset and liabilities. So if you look at this balance sheet, there's interest rate risk in these assets, and there's interest rate risk in these liabilities. So if the interest rate risk in these assets doesn't match the interest rate in the liabilities, interest rate risk in the liabilities, and interest rates move if the RBI raises or lowers rates, the bank as a whole could lose a lot of money. So one of the things they do on the treasury is they manage that risk. So there are metrics for that interest rate risk. In particular, there's a metric called duration. Specifically here, it's called Macaulay duration. And it's a weighted average. It's the weighted average life of the cash flows of your assets, and the weighted average life of the cash flows of your liabilities. If that weighted average is the same, you've immunized your risk. If it's different, you're open, you have risk. So what those traders do is they monitor the differential in duration between the assets and liabilities, and they manage it. They manage it. They either match it up to eliminate the risk, or they judiciously allow mismatches to occur. That's called gapping, so that when interest rates move, they can make money. The bank as a whole makes money on its balance sheet. What else do you do? They issue short-term bank paper to fund the assets. They sell treasury products to clients. So I'll get into that in a bit. So my area, for example, with derivative products, we create the products. I trade them. I trade the pieces that we use to assemble the products, and salesmen sell the products to clients, right? And we've got a financial engineer on the desk who helps put them together. So as trader, it's my job to source the little pieces, buy and sell them. It's the financial engineer's job to design the product and put it together to make sure it makes money for us when all the pieces are put together. And it's the salesman's job to manage the relationship with the client to get the client to pull the trigger and buy the product. So we do that a lot, and it's a team. Those three people, and I'll talk about it more shortly, the trader, the salesman, and the financial engineer are the frontline people. They're revenue generating people. That's important because the revenue generators make the most money. Yeah, they're the front line. Everybody else supports them. And that's where the pressure really comes down, right? Less so on the financial engineer. Most of the pressure is on the trader. It's the most pressure-filled job. Sales is no cakewalk because they have to manage relationships. And frequently those are relationships with those are difficult relationships to manage, leave it at that. And apart from building and selling those treasury products to clients, as a trader, I also make money by buying and selling all these other products, right? I can do both because there's time. What you find is that on a trade floor, you can walk in and you have no set day. You can walk in and do nothing. You can stare at the screen. If you do nothing, you don't make money. You wait for a client to call and then you do the client deal. But what you really need to be doing is walking in, looking at the yield curve, looking at the markets, looking for opportunities to make money, studying them and putting on those trades, and servicing the clients and the salespeople. And that's how you make your day. You have to be very self-motivated. You have to be driven to go in there and compete to make money and think of ways to do it. And honestly, you buy and sell whatever you can to make money, whatever the opportunity is. I traded interest rates for a long time. If there was an opportunity to trade foreign exchange as part of that activity, I would do it. Whatever works. So you go into a bank trade floor if you have an opportunity to visit a treasury trade floor, you should. What you'll see is, if you went to New York or London, you'd see an office floor, open plan, the size of a football field, where it's all big desks with a lot of people doing their stuff. Trade floors like in smaller cities in Canada or in other countries that are smaller, they might be smaller, but they have the same functions. So every desk has a business, and the businesses are typically organized by asset class. So you have a trading desk that specializes in foreign exchange, one that specializes in precious metals like gold, silver, platinum, another that specializes in fixed income. The fixed income desk could be split into two desks or more. So one desk would trade government bonds, another desk would trade credit corporate bonds, and another desk could trade inflation-linked bonds. Okay. And you'd have equity. So you'd have an equity business, okay, equity desks, and they would trade, they'd separate out on their own categories, blue chip companies, small caps, tech, whatever. And you'd have commodities as opposed to precious metals. Because precious metals, gold, silver, platinum, they're a lot like currencies. So for example, I look at gold as a currency. I look at silver as a currency, vice versa. Actually, personally, I look at oil as a currency as well. But that's me. Well, a lot of other people don't. Commodities, oil and gas, metals, and something I honestly don't know a lot about because I've never traded them is softs. Softs are a name that we use for agricultural commodities, things like soybeans, rice, wheat. And to do that, you have to know something about farming and climate and weather, and the cycles. And honestly, I don't know anything about that, so I stay away from it. I know a lot about oil and gas. I know something about metals like lead and copper. I know a lot about gold and silver. Okay. When you trade stuff you know about. Because if you don't know about it and you trade against somebody who does, they'll rip you off. That's another thing. You cannot be naive going into this business. You learn very quickly that if people can rip you off, they will, because it's big boys rules. You have to watch out for yourself. But if you go into a bank, treasury for a career, you may very well find yourself on one of these desks, one of these asset classes. Last point before I go over to questions. Treasury trading desks have frontline roles and support roles. I won't talk too much about the support roles, but I can tell you that the frontline roles are really exciting. My role was trading, okay? And that's because I was quantitative. I knew the products, I knew how to price them, and I just took to it, and I knew how to survive. Usually, if you go onto a trade floor, if you survive 3 months, you'll survive. And a lot of it is surviving long enough so that you learn, right? If you're not cut out for it, you'll get blown out fairly quickly. Then you drive on. My advice to people is to do what you enjoy. Do what gets you up in the morning, because you're going to have to compete at this level. You are going to have to spend a lot of hours on it. And if you enjoy it, you'll just go in there and you'll do it anyway because it's your hobby. That's what I did. In fact, your problem is going to be fitting the rest of your life into it because you love it so much. If you're going to work and you can't be bothered to get up in the morning and you hate it, you won't succeed. You won't be the best. So my advice is to do what you like. Um, I know it sounds kind of cheesy, but really, honestly, do what you like. All these roles will pay you better than comparable roles just out of school. Like I compared to a role, out in publishing, or these are well-paid roles, and they get better because the more senior you get, the better paid you are. Of course, it gets more competitive and it gets more stressful, but that's life. It's a choice you make. 3 roles in frontline trading, as I said. Trading, you've got to be able to handle pressure. You got to think fast. You got to be able to do things correct. You got to stand on your own 2 feet. If you make a mistake, you've got to admit it and change. You got to be flexible, adaptable. You've got to be competitive. You've got to know how to negotiate, because it's all negotiation. Salespeople, it's about relationships. And a lot of people say, oh, sales is like teaching. No, 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 no. A lot of people who look at sales as teaching are not great salespeople. Salespeople have one ability that's important. That is to have the relationship and get your client to say done. Get him to do the deal with the trader. That's your job. I'll tell you a story about a salesperson who we got rid of. We spent 6 months working on a product, the financial engineer, me, and the salesperson, with a client, tailored to that client. Okay. We're going to make a lot of money on it. And the salesperson is holding the client's hand, teaching them, getting information from them. We put that deal together, 6 months. You know what the client did? Went and did the deal with another bank. That salesperson was gone. Okay. I can't tell you how frustrating that can be. Part of it is the client, right? There are clients there that are predatory. Some clients, you meet all kinds, right? But the really good salesperson has got that relationship that goes back years. They know the client, they trust each other, they can bring the client to you, and they'll get the client to do the deal with you. If you're in competition with another bank for a trade, and the client says bank A gets to bid, bank B gets to bid, the salesperson you want is the salesperson who will get the client to give you the last call, so you have an opportunity to improve your bid and win. That's the kind of sales, and that's not easy. A good salesperson is worth their weight in gold, and they get paid a lot. Traders get paid a lot to get it right, to manage the risk, and to deal with the stress. Salespeople get paid a lot to manage that relationship and to get their clients to say done. And the structurers, they get paid to put the deals together, right? And to do the math. So the structurer, he's the guy who's got a PhD. I don't think you need a PhD to do sales. Like I said, it's mostly a relationship thing. Although I've seen some very, very strong, competent salespeople. Trading, you get the whole, traders have to be numerate. They need to know what's in the pricing models. They need to know, if you're trading exotic products, you need to see the curves moving in your head. Option price is a function of 5 variables, like I said. So it's a function of 5 variables. So you can imagine all the curves. Mathematica can't handle it. Okay. So you just got to be able to see those things moving in your head. And these are the other support functions. Risk management, pretty quantitative. they're independent. And then you've got the middle office and the back office and IT. Middle office, they track your P&L. The back office, they settle the trades. IT, they build your systems. And that's pretty much it. I want to leave time for questions. So I've just shared with you a bit of my experience, and I've tried to give you a little bit of color on, what the geography of the banking business looks like, what the geography of a treasury trade floor looks like, and what some of the roles in the treasury trading business look like. So I'm going to stop there and throw the floor open to questions. So how are we going to handle questions here?
Yeah, so thanks, Frederick, for the presentation. We will go ahead and take some questions now, as you said. So just a reminder to everyone, please be sure to type your questions in the question box in the control panel, right? And I think we already have one question there, Frederick. So I think you can take that question.
Okay. Okay, so is this the one from Siddharth Bobby? That's a long question. Let me just read it.
Yeah, sure. So just as in banking, okay. You were reading the question. Sure.
I'm reading it right now.
Yeah, okay.
Well, I haven't worked in a corporate treasury. I've worked in an investment buy-side treasury. Let's see. To my knowledge, corporate treasuries do not segregate banking book and trading book because they're not in the banking business. So I can tell you a little bit about what manufacturing companies do. Okay, where to begin? Everybody's interested in money. Okay. If you work in a corporate treasury, you won't make as much money as in a bank. Here is why. If you work in any of the treasury roles that I've described to you in a bank, you are considered a profit center. As I said, you're a profit center, you are a revenue generator. Everybody else, move this over. This front line here, these are revenue generators. You bring in money, you make money. You're a profit center. All these others here, 1, 2, 3, 4, these are support functions. They are cost centers. By definition, cost centers don't get paid as much. That's just the way it is. That's the way of life. If you go to work in a manufacturing company, in a treasury, let's say you go to work for an auto company. If you go to work for an automobile company, a Tesla, Ford, a GM, the people who get really paid are the engineers who build the cars. Okay, that's the profit center. Lee Iacocca, that's the sexy part of it. Building the sports car, getting that new market. They're the revenue generators. Treasury, your job is different in a manufacturing company. In a manufacturing company, treasury is viewed as a cost center. Your job in corporate treasury is not to make money. Your job is to manage the balance sheet, right? The assets and the liabilities, specifically the liability side. Your job is to issue the bonds that Lee Iacocca uses to build the manufacturing line, the production line that builds his Ford Mustang, right? Or his Chryslers. So your job is to raise money. Your job is to keep the cost of that money down. And your job is to help them evaluate which projects are profitable. So at Hero, for example, we teach a topic called capital budgeting, which is how, if you have a selection of 3, 4, 5, 6 projects that your manufacturing company can make. Do I build this new car? Do I buy this plastic extrusion machine to make moldings for the doors on the cars, or to make plastic pipes? And that plastic extrusion machine is going to cost me so much money, and it's going to make me this much in cash flows over the next 10 years. Should I do it or not? We teach you how to evaluate that decision. That's the kind of decision you do in a corporate treasury, but it's not a profit center, okay? It's a cost center. And it can be very frustrating for people who have a lot of these skills, which if you applied these skills in a bank would make you a lot of money. But if you go to a corporate treasury, you apply those skills there and you don't get paid as much. But the pressure is a lot less. And you might have a lot of fun just, with the intellectual stimulation. But I got to tell you, if I had an engineering degree and I was like top flight, top line, if I wanted to go into finance, I'd go into a bank or a hedge fund where you are a revenue generator. If I were going to go into a corporate, I would want to go into the production line, or I'd like to go into the place where they design the sexy, cool Teslas, or make the batteries, or make something like the solid fuel for the next cruise missile. That's what I would do, because that's where you're going to make money. Have I answered that? I hope I have. Are there other questions? Yeah, I'll just add one more thing to that. I mean, I understand that you guys are engineers in the top engineering school in India. My best friend is a graduate of IIT. And I gotta say, it's like the world is your oyster, right? You can do anything. So go for the top, right? Go for what you really like to do, and go for the roles that are going to be most rewarding. If you spend a lot of time developing engineering skills and you want to go for a corporate, try and find a role where you're going to be building the products of the future that are going to be super hot and in the rest of this century. If you're going to go into a bank, go into the area that, or at least do your best to get into the area that's a revenue generator spot. Don't waste those bullets, but do what you like, do what you enjoy. Like, I'm sure you guys can find it just as rewarding on a trade floor of a treasury, and also find it rewarding building a new type of car or a new type of cruise missile, whatever's fun, right? We still have time for questions. Pratik, are we good?
Yeah, I'm just awaiting questions. We have answered the questions that were there. We are just expecting a few questions. Guys, it's an open platform and we welcome all the questions. If you have any questions in the presentations or you want to understand anything about the program that we provide at Hero Wired or something, so definitely we would love to answer those questions. So please type in your questions in the Q&A section. So, Frederick, we have a question from Sunil Shukla. He wants to understand, how you can be his mentor.
Um, I don't know. We got to get to know each other. Take a course at Hero Wired. That's one way in finance faculty that I'm teaching. We've got some good instructors there. Otherwise, drop me an email. You've got my email, right, Pratik? Maybe you
Yeah,
can
we
share.
have the email. Yes.
I'm happy. You have my email, so I'm happy to share that. Yeah, Sunil, reach out to me. We can chat a little bit. Is there another question here? No, you don't. Short answer is about certification is it depends. It depends. If you're trading on a regulated exchange, okay, so if you're trading a regulated product, you have to have certain certifications. You have to pass exams. Okay. And I've never known anybody to fail. They give you the books and they say study up for it, and you do the exam and you do it. You can actually do that when you're already on the trade floor. Okay. But when I started, and I started a long time ago, I really didn't have anything special. I went out and got some certifications from the Canadian regulator for options. So I was actually certified to broker and trade options on Canadian exchanges. I never used them. I never used those certifications. And I'm sure they've expired. And I actually stopped putting them on my CVs. And the reason I stopped putting them on my CVs is because they were old. And if you put them on your CV when you get a new job, they ask you to produce them. And it just got to be a pain in, it got to be annoying having to produce these certificates that I got 20 years ago and never used. So I just stopped putting them on my CVs, and they're somewhere. But yeah, if you're going to trade in a certain market and you're regulated by a certain regulator, so if you trade in London and you're trading regulated by the FSA, then you're going to have to pass their certification. It's not even really a certification. It's just like you just have to pass their tests. And yeah, and you do it once you're there and you keep it up. And like I say, it's not difficult. I've never known anyone to fail.
And just to add to this, I think, Frederick, it's more important to understand the strategies in order to trade in the market. And we do have a certification program which talks about the entire financial analysis, valuations, and risk management, where
Yes.
Frederick himself mentors people. And, we have other faculties as well who are industry experts, and they have, approximately 15 to 30 years of experience in the industry, working into different domains, like credit traders, like Frederick already I talked about his introduction. So we have people who have worked in the big fours. So definitely you get the right practical exposure and the skill sets, which actually make you ready for the roles that Frederick has already told about.
Yeah, there's a difference here. To be clear, there's a difference between certification that's required by regulators and certification like the one you might get at HeroVirid that demonstrates to potential employers that you've had instruction and that you have skills. And that can be extremely useful. Well, first of all, you're going to get the skills so you know the stuff. And second of all, having that can help get you the interview. So you got to get your foot in the door, and this will help you get your foot in the door. And once you've got your foot in the door, you've got to be able to develop that rapport with the interviewer and satisfy him that you are the answer to his needs. Follow-up question. I don't know if I can answer that. I'm not qualified to answer that. I do know that there are special visas that you can get, but I'm not an expert on it. There are work visas in the US that you can get if you're a foreign national, if they can't find somebody qualified in the US, and they have the same thing in the UK. So for example, when I went to work in London, England, I was sent by a Canadian bank and I got a work visa. The bank got me the work visa. And then after a while, I got an extended visa. And then I ultimately got permanent residence, and then I got citizenship. So that's something you can explore. It is done, though. It is done. I know it's done. It can help if you get a job with a local bank first that has an office in the other country, then they can send you there. What's this? Cool. What do you think?
Last 1 minute to see if any other questions. Sorry, Frederick, you were saying something.
Oh, what do you think? Does that cover it?
Sorry, can you repeat?
Does that cover the questions, Pratik?
Yeah, mostly all the questions have been covered. There is no question unanswered. I just see that I think we are done with the questions part. And so I think we can wrap up the webinar for now. So thank you, Frederick, a lot for this wonderful session. And also thanks everyone, for being a lovely audience. And we will definitely see you again for another exciting webinar with us. Sure. Thanks, everyone.
Thanks, guys. Pratik, I'm going to sign off now, okay? I'm going to stop my screen share and log out.
Sure.
Okay.
Yeah.
Okay, we'll catch up later, Pratik. Thank you, everybody.
Sure. Thanks.
Bye.
Thanks, Cedric. Yeah. Thanks, everyone. Bye.